Now, the first example I'm going to show for the new strategy is from the 10th of March 2022. This is CPI. All these examples are CPI because it's the best. So what I'm going to show you is what happened. So the actual data was as predicted. A 0.8% increase in inflation month on month was predicted, and that is what happened. Now, when the predicted is the same as the actual, you can expect a little less volume because there's no kind of outstanding data release that's going to shake the markets up. So you can expect a little volume, but you still can trade them very successfully because there will be moves. There will be moves there. So it was 0.8, and the actual was the same as the forecast. And this is the first time in a long time, because remember, the whole of the past 2 years, inflation has been running rampant. This is the first time in a long time where not only was the actual the same as the forecasts, but it wasn't higher than the actual wasn't higher. All the previous times, the actual had been higher than the forecast. So this is the one time the actual wasn't higher than the forecast, which means at this point, I was looking for sells in the market. So if I just show you what it was, this is right before the news was released. So as you can see, the next candle is the 130 candle. And if I just draw the zones that I had marked on, you can see these are the previous two US sessions. So if I just draw that on there, what I had was that zone right about there. And as you can see, in US, we'd already start to reject it in the session that had already started. Just change that right there to zone. Now, so that is the US zone that I was watching. And remember, I was looking for downside because of the news release. So I was just looking for a push into there and then a rejection. Yeah, it's not very far to push, but this is the next US zone. So I was just looking for a push into there. And remember, as I've already explained, why the price action here was, I was expecting it to be bearish because of the data release. So if I just drop it back on the 5 minute here, I will show you exactly what happened. So as you can see, the first 5 minute looks like that. Not too much volume compared to usual at all. There's usually a lot more volume than that, but I've already explained why that is. And also, if I just go on the 15 minute, that is where I was targeting, just the previous day's US low zone down there. So chuck it back on the 5, and as you can see, what happens here, push into the zone, price pushes into the zone. This is the point where you can start to begin selling. And as you can see, the next candle is like that. You could have even sold after that 5 minute candle. So just what happens from there, price drops, pushes, come back, and then this is the absolute beauty of knowing your US zones. Price taps to the pip into this zone right here, the previous day's US low zone. Price tapped it to the pip and then rejected. So that is pretty much just what happened. Let me just measure how many pips that whole thing was. So that was a good 260 pips. That was a big trade right there. And it was easily catchable just by knowing that we were bearish for this new strategy at the time because of the news data. All we were looking for was a push up to a zone so we could sell off to the downside. And it could have been from just up here after this 5 minute candle maybe. So if I just draw that on right there, after that 5 minute candle stops up, and then targeting down there. Really simple, as I've explained. So that is example number 1. I'm going to show you a few more now. Okay, this next example is CPI from the 10th of November, and this is just before the news. And what I'll do on is I'm drawing on the previous day's US low just to show you what happens. I would normally just draw the whole rectangle tool on, but I'm just going to draw that on now because you're going to see what I'm talking about. So that is the previous day's US low. Perfect, just like that. And the news was released, and obviously at this time, CPI inflation was flying. So it was only going to be bullish for gold because the news was very bad. Specifically this one, the news was very bad for the dollar. So it was very bullish for gold. So we were only looking for buys. Now in this example, there's another learning point you can see that I will show right now. So this is just before, this is the 5 minute, just before. So what we do is, when the news was released, remember, you've got to be on it. You've got to be there as soon as the news is released. You can't wait kind of like 10 minutes. You've got to be there as soon as the news is released. And this is going to show you exactly why. So the news was released, and as I've already said, it was very negative for the dollar, so very bullish for gold. And here is what happens on the 5 minute. just like that. You can see price goes, it taps in, and then bang, just like that. And then it even carries on a bit, I think. If I just, yeah, you can see it carries on way into the sky. So you can see absolutely beautiful. Price dropped down, tapped into our lower time frame zone, and then went whoosh, and absolutely flew to the upside. I mean, that is hundreds and hundreds of pips right there. And you could have caught that. Now, in this one, it's more difficult because it's not price coming down in a few candles, coming down to the zone, rejecting, then bouncing off to the upside. In this example, it was in a matter of minutes, even seconds, price came down, tapped in, and then rejected to the upside. So what I'm saying here is that if you see price goes down, when we're very bullish, if you see price goes down to the zone and it starts to reject to the upside like that, in this kind of situation, you don't have to wait for a candle close because something like this can happen. Now, obviously, that is a little bit of added risk, but with news, you don't want to be missing moves out by always waiting for the candle to close. Once you've seen that price tapped into it and then pushed up again, so say price just tapped in and pushed up kind of up to there, at that point, you can be buying there expecting price to reject this because it already kind of had rejected it. So that is just another example. This example, you had to be quick, you had to be on your toes in this example. So once you saw price rejecting and price started to push back up after it tapped into the zone and we knew price was going to be heading bullish because of the release, you could have just started buying from that point. So again, beautiful price action. If I just show it on the 15, so if I just show it on, yeah, even just the 15, look, if I just take that down there, you can see to the pip, price dropped down to our key zone, even though price was very bullish, and then it absolutely flipped to the upside and flew like that. Let me just measure how many pips that was. So that was, yeah, I mean, that was getting on 450 pips right there. And you could have caught a good chunk of that just using this strategy, this knowledge. And as you can see, it tapped to the pip into our lower time frame zone. So on to the next example now. Now I've got even a slightly different example now. Again, this is all the same strategy, all the same knowledge, just with different examples applied. So it's CPI again. This is from October the 13th, I do believe, if I just checked that. Yes, it's October the 13th. This is just before the news is released. Now, again, the news was very negative for the dollar, so very bullish for gold, as you were about to see as well. So if I just go on the 30-minute and show you the lower time frame zone that was just looking for buys off of. So first of all, we had this was 2 days before, that was the high zone for the session. We also had, if I just draw this on right there, we had the previous day's US high there. So we had these two zones we were looking for buys off if price could reject them. So if I just draw this across like that, so news was about to release in 5 minutes. So these are the two zones. Remember, we're only looking for buys, and these are the two zones for it. So this is before news is released. The first candle, the first 5 minute candle, so remember, you've got to be watching this on the 5 minute, did that. It broke through that zone there. So it invalidated that zone. So if I'm just going to remove that, it's now onto the next zone. We're looking for buys off of this next zone here, which is the next US zone possible. And here is what happens. Price pushes down again. At this point, we're just looking for tap into that zone so we can enter, and a rejection at that. So again, price goes down, and now price is starting to reject. Now, personally, I would enter from there. There was more opportunities to enter just after, but I would enter from there. That's a good enough rejection for me, knowing that price should be flying bullish, but it's not. So like I've said, you don't want to be getting caught in this move here. We want to be catching the actual move, the move which makes sense, which is bullish for gold because of the news. So if I just draw this on right here, buys from there, stops a little bit deeper down there. And now the target, what I'll just do is I'll show you. So the target, you can see we had a US zone up there, which was the next US zone. You could either targeted up there, or you could have just taken profits at what we'd already created in US session, which was the current US high. If you weren't taking profits there, again, you should be taking break even there. But for the purpose of this, I'm just going to put that on there. So it was what the high we'd already created in US session. So we'd started to reject our key lower time frame zone, and we were expecting price to go bullish. So if I just show you the next few candles, you can see price clearly rejects that zone and then pushes off to the upside. It pushes way above target. So if that wasn't your target, you made a lot of money right there. Again, another massive push. If I just measure that, and it could have been caught just using this knowledge. So again, 360 pips, massive push. These are moves you can catch because, as I've already explained, this is how the market movers use news to make money in these drops off here and then push it to the right zone that we already know, the right US zone, so then we can push back off in the right direction to the upside. So another beautiful example right there.